Are you thinking about buying a house? Do you have one under contract? This video is all about what not to do when buying a house. Hi, I'm Sherri Foster and I'm your Northern Virginia right size agent. Today we're going to talk about all the things you should not do when buying a house. Let's start with the big one. Don't make large purchases like a new car or furniture for your entire new house. New debt comes with new monthly obligation. People with new debt have a higher debt to income ratio. Since higher ratios make for riskier loans, you may no longer qualify for that mortgage. Don't apply for any new credit cards. I know how tempting it could be. You're up there, you're doing a little shopping, you get offered 10 or 20% off to open a new credit card. Don't do it! When you have your credit report run by anyone, your credit score will be impacted. Lower credit scores can determine your interest rates and even your eligibility for that approval. Don't max out credit card debt. Maxing out your credit card is one of the worst things you can do when it comes to qualifying for a home loan. The credit score takes into account not just how much debt, but how much you owe relative to your credit limit. Try to keep how much credit you use below 30% of your total credit limit. On a similar note, don't close any credit accounts. Many buyers believe having less available credit makes them less risky and more likely to be approved. This is not true. A major component of your credit score is the length of your credit history, not just your payment history. Closing the accounts will have a negative impact on your credit score. Don't quit your job, retire, or change careers before buying. Demonstrating consistent employment is essential when applying and getting approved for that mortgage. Mortgage companies look for a consistent employment history of 2 years or more at the same employer, or at least in the same line of work. You can always take a new salaried job, but hourly, 1099, and self-employment could impact your pre-approval. Don't co-sign another loan for anyone. When you co-sign, you are obligated. And with that obligation comes that higher debt-to-income ratio that I just talked about. Even if you promise you won't be the one making the payments, your lender will have to count those payments. This one may seem strange to you, but it can mess up your loan application more than you can imagine. Don't deposit large sums of money, especially cash, into your bank accounts. Lenders need to trace where that money came from. Cash is not traceable. If you receive a large sum of money, discuss it with your lender before you deposit it. The best plan is to hold still financially until your loan is completed. For information to help you decide on what style home you are looking for, watch this video on 1-story and 2-story living. As always, I love those likes and comments. I post new videos every Monday, so I'll see you here next week.